What's going on? Pax is the only guy who knows how to execute. What's going on?
Yeah, he caught the whole thing.
Yeah, he's a master of execution.
He caught the whole thing.
What's the cheap? I know we must be talking equities. The least favorite thing for me.
We've been looking at the equities. I mean, this morning I was really looking at, and yesterday late I was looking at the European debt because it really wasn't responding to any risk off, and they were all buying U.S. debt instruments because they're all waiting for Lagarde to actually see if she's going to do something.
Well, I mean, we now it's crystal clear as to why she's brought in, right? So let there be no doubt about what this choice was about.
Hey, all right, now Ira's in the room. Oh, shit. Ira, I'm sorry. Hold on.
Yeah, Jack, I hit record, too. It's amazing. It was a good thing you put that, you told me to do that, right? I had to blown that, too.
What's that? I'm sorry.
No, we just wanted to make sure we hit record. I mean, and the gold, too, yesterday, the only one that bought the gold was Angelo. At those old number sets.
Yeah, because you could define, you know what, I wasn't paying attention, so I was involved with others, trying to improve my spirit rather than my material world. But it actually went down to a level where you could actually find, again, which is the key, a lower risk play, and it did bode well. And really, the gold Swiss, because, the only thing I can think about why they would be, when I looked late in the day, why they had sold the gold off was, China was out, has really been out. So I'm wondering whether some people use that, there's no buy-in, so it's just easy to push it down. And, sometimes during these week-long holidays, well, here you have a combination between the Jewish holidays and, of course, the Asian holidays. So you do get some thinness in the markets. Yes, that's historically factual, by the way. When I say historically factual, it's not like China's been a player for anything more than 25 years. They haven't, but they've been involved, now. And of course, you get the Japanese lunar holidays and other things that go on. So you do get it, as we know, in bull markets, when there's a lack of buying, it's easy to push things around. Just like with bear markets. It's easy to raise prices when liquidity starts to drain for whatever reason, and you can push markets to correct from certain movements. And that's evidently what we saw. So good on Angelo, because that made perfect sense. And then last night there was a story I read this morning. One of the there's only 3 people on the bank board, and one of them, Mackler, came out and said, yeah, of course we'll intervene on the currency. Yeah, nobody seems to, although they did beat up the Swiss, that's why the Swiss dropped, because she said, yeah, we'll intervene, because they came out, their CPI, I believe, or PPI was negative. They were looking for up 0.1%, they got down. So all the data coming out of Switzerland, the retail sales was weak. Again, I'm just catching up, but so you did see some things. But we are really in a bad bind here. We're just in a bad bind. And people are waking up that central banks are really losing. What are they going to do? And I know the Australians cut on Monday night, but that was expected. But still, what are you cutting for? You have real low unemployment rates. What is prompting you to cut? And it really kind of puts more pressure on the Fed anyway, because what is it that they're seeing that the Fed's not seeing? So that's where we are.
Yeah, we're looking at I was looking at all the gold metal stuff, and I mean, it's really, it started out with the Aussie weakness, and it's all Pacific Rim stuff, and just this, and it was a gold against the Swiss, the gold in euros, was kind of a lag, so. And I just been focusing on the European debt because the gold, the really big pops in the gold were off the European debt last month.
Right, right. You know what? And I thought maybe because of the Japanese bond auction with rates on the long end going up, may have hurt the gold a little bit on Sunday night, Monday, because with all the news that was out, the capture of those Saudi soldiers, although, you know what, these stories disappear so quick, you wonder how much legitimacy there is to them. But I thought for sure, and gold did move up for a minute, but then, started heading down, I think, with the European debt. I think, Judd, I think that's absolutely right. That, where's it going? But on the other hand, the yield curves did steepen. If there's, I didn't catch that, but had I had any position on, I would have been with the steepeners, because I think that as people begin to understand really how out of sorts central banks are here, and that includes the Fed, that steepeners are certainly in play here, and because there's nothing else to do but except to go into greater deficit. It's all going to be about fiscal stimulus. I mean, that's the roar coming out of Europe. On the other hand, Japan went, of course, the other way when they raised the VAT tax from 8 to 10%. But that, of course, has been the only surprise would be if they decided not to go ahead with it, but they went ahead with it. So we will see where that goes and what happens in the United States. I don't know. I have a question that I pose to people. The stock market has gotten very comfortable that somebody from the White House is always going to come out to salvage any kind of break, right?
Oh yeah, and
right? It's
I
Pavlovian.
think that game's over for them because everybody's selling rallies.
You know what? It is interesting, and I've been mulling this question over. I have it written down on my papers for the last 5 days, 6 days, because I tried to have some discussions with people, and Trump is not a fan of Wall Street. He's not. He's never been, because they've never been a fan of his. And we can get into the details, but I don't want to, because that's at this point silliness. But as I said,
they haven't financed them. Wall Street did.
No, but Trump likes the stock market because he thinks it's a really good barometer on his administration, and of course the pillars are, the tax reform and of course the rollback of regs. So those are the things that have, and every time, when the market's under pressure due to tariffs or this or that, they roll out Kudlow or Mnuchin comes out. Well, Mnuchin got spanked for being a little too talkative. But that doesn't surprise me. So I pose this question to people. This is totally my opinion. It carries no weight. It has no bearing. Just one person's opinion. But what my opinion is, Trump doesn't run in 2020. That he gets fed up with the whole, being the target of everybody's animosity, and he gets to reside at the end of the day and say, hey, again, my picture hangs in the presidential portrait gallery. I'm the 45th president, whether you like it or not. I'm there forever. I'm there forever. And I'm done.
Ira, I'm going to take the other side of that. I don't think he's going to not run. He's definitely going to run, and I'll tell you why. My fish guy. Okay, yes, my fish guy was at a fundraiser the other day with Trump. Sat right next to him at Cipriani's, and they had a mutual friend in common that used to work for Trump. Blah blah blah. Trump's up there being cheered on, being motivated by people that understand his language. Okay?
Yep.
And so he's receiving that positive reinforcement, and that positive reinforcement includes keep draining the fucking swamp. So with that motivation and the fact that he truly believes in what he's doing, okay, leads me to believe he's not pulling out. And my buddy and my guy who's 76 years old, he reads people really, really well. And he said He said that Trump believes in what he's doing. He truly believes he wants to help America. Not everyone agrees with how he's going about it, okay? But somebody has to put their foot down and stand up to what I'm going to call the injustices in the world, okay? The economic injustices. So based on all of that and the feedback that Ben got while sitting next to Trump leads me to believe he's not pulling out.
That's why I throw this out, as I said, it's a point of discussion. But I look at a guy, I mean, he's under siege every minute of every day. And, you know, and I only bring this up from a trading standpoint. I don't care about anybody's politics. I really don't. I don't care about it because that's not what this forum is about. I mean, we could sit and have a cup of coffee and discuss big political views. That's great because that's just, you know, discussion and it's a nice way. But I only care about these things from the ability as a trader and an investor. And my point in thinking about that, and it's only thinking about it, is that, hey, then when he becomes what I would call a nihilist, and he goes, to hell with all of you. And you know what? I'm going to press ahead further with tariffs. And there's nobody coming to save you in the way the stock market gets used to being saved from itself all the time. That's the only reason I have the discussion with myself. Otherwise, I couldn't care less about it. It's more gibberish. But if he stops rushing to save these guys, because he has been saving them. He's been saving them. With the tweets, because they've all been so effective, ability to tweet and change the narrative that it's worked. But what if he goes the other way? What if he goes the other way and goes, you know what? How do you like me now? How do you like me now? That's the only reason I bring it up. Otherwise, I could care too. It's just discussion.
Yeah,
but
no, I understand. I understand completely why you're bringing it up. But you know what, Ira? Maybe it's a lot. I'm just a simple guy, okay? And maybe it's a lot simpler than all of that. And maybe it's just the cycle finally running its course, and now we're getting the profits recession, which has been in play now since the second and third quarter of last year, which by my estimates were the peak. I just believe it's as simple as that, and the Shanghai Accord, the rollback of regulations, and tax reform, all that stuff did was elongate the cycle, and now it's reasserting itself. You know what, Ira? I'm simple. So I believe it's just as simple as that, and that's where we are now.
And Angelo, I agree. Angelo, Ira, can I just echo real quick? I absolutely agree with Angelo on that, and it's probably the first time I've ever said that. No, he and I agree all the time. But I think it's, you know, the Shanghai Accords again and the corporate tax cuts were just another form of hidden QE in order to keep this rally going as long as possible. You know, I just had a conversation with a guy in my room about, you know, how when Trump was running for president, he was yelling and screaming that at 19 to 20, 2100 in the S&P, that it was a bubble, all based on President Obama's stimulus and QE under him, and now he's bragging about this great, wonderful stock market. So I think he's going to wear that jacket when things fall apart, when really, like Angelo was saying, it's based on many other factors.
Yeah. And like Peter just said, the election is 13 months away. Let the market dump now, okay? It'll bottom out sometime in the next 2 to 3 quarters, right on time for the election.
Well, in that regard, I will. First of all, and I openly wrote about it many times, I'm not opposed to a profits recession if it comes with higher wages. Now, we might be in that because when you were running record profits with stagnant wages, that's not healthy for this economy. So if that's corrected, That's a good thing. I'm not in favor of Wall Street, or Wall Street, being in a boom for the sake of Wall Street being a boom. That does not make a healthy economy.
Oh, no, Ira, you're right. I mean, capital has had the edge now for quite a long time.
Right, I agree.
No question about that. But you and I both know that the moment the cycle starts to kick in and wages, let's just call them, they're at peak cycle here, okay? Not that they're terrific, okay, but they're peak cycle, all right? Profits have nowhere to go but down. And all of these new incoming CEOs, Danielle DiMartino Booth brought up something very interesting. She follows Challenger, Gray, and Christmas. And the month of August had one of the highest CEO revolving doors in a really, really long time. So number one,
first sign of profit turning.
Yeah, no shit, right? So that means that the outgoing CEOs want to get out of Dodge as fast as they can. Now you got the new guy coming in who has an allegiance to nobody. He looks at his P&L and he goes, damn, profits are declining. I got to start chopping heads.
Well, I was talking with Santelli because, see, what a lot of people don't understand about capitalism is that here's what capitalists know. If you provide them with uncertainty, especially in the U.S., where it's really relatively easy on a global basis to lay off workers, they'll keep workers instead of capital expenditures. You know that, because why should I go out and spend $10 million on a machine when I can keep workers on, and if things start to turn down because of uncertainty, I can get rid of the workers easier than I can deal with the capital I expense. So my fixed expenses aren't as great. So that's part of the reason why we don't get a correction in the labor market, and it gives you some sense of a false positive.
Yeah, I mean, look, a lot of companies have had a tough time hiring people in the first place, finding the right kind of employees, So, I don't think they're going to be so quick to just let them go at the drop of a hat, which, again, elongates the cycle even more, until either they have to or the Fed just steps aside and lets the cycle work its magic, if you will.
Well, and the more that I'm convinced about it, the gig economy has enabled a lot of people who would be, searching for jobs, not to go out and necessarily search for jobs because they can work on a schedule that they can create and give them some flexibility and still have some income, where before it was an all or nothing proposition.
Yes, and the gig economy actually reinforces deflation as well. It's just another fact. It's just one more factor, that enters into the equation, to reinforce deflationary forces, So it's complicated.
It is complicated. We truly don't understand its impact yet because we haven't had enough time to deal with it.
But I heard you say something earlier when I came back to my desk, Ira, and that is, it is very clear to me that the central banks, the global central banks, have no freaking idea what they are doing. None.
The currency is interesting here, Ira, because the Canada Swiss is putting an ORL, and it's right into its 200-day moving average. And yesterday, one of the guys from Germany had actually bought the euro. And then he was telling us why he bought the euro, and I put up Euro Aussie. And I mean, that bottom right at the 200-day, that was a beautiful pattern. And it's still going.
As I said, I've maintained this for a while. You have to be careful with the euro here, because again, if it turns into an investment opportunity, as we've talked about, it's not there yet. I mean, hell, I looked at the DAX today. The DAX was absolutely an abomination. It looked terrible. It looked terrible. But I'm looking at it as an opportunity because, again, who's got the most room on their balance sheet? We know interest rates aren't going up in Europe. I mean, yes, they may fluctuate in a 30 or 40 basis point range, but as long as the ECB is involved in doing this, no. You know what? You better treat it as a trade and not as an investment, because there are a lot of people who put on short bonds as an overall investment who've gotten, not so good. And again, the Japanese situation becomes interesting because the Japanese bank has basically just told everybody, that's why that's important, is that we don't really like the outcome of this. And we're kind of stuck here, which, is something we have to pay attention to. They're waking up to the fact that, you know what, maybe we're not in control of this as much as we think we're in control of it. That's the scary thing. That's my scary time.
Scary time. That's pretty funny.
Michael just put in here too. He said he's looking at the credit card companies as probably the best short on the board, and they started coming undone a couple of weeks ago, and people are smelling that the consumer's going to pull back.
Well, again,
look at Amazon, right? Well, yeah, but I look at it more than that because I have to listen to every pundit on CNBC tell me, don't worry about it. The consumer, the economy is doing really well. And I read that article about the 7-year auto loans being extended, and people are taking on massive amounts of debt. I've said this before. I think the CapEx recession, a potential oncoming profits recession, manufacturing recession, the real risk there is that leaks into the labor market.
Right.
That's right. That's the huge risk right there. And if it does, then I think we end up with a recession.
Well, that's right. And so then the pundits come out and they start talking about we're talking ourselves into a recession, the great Jim Cramer school. Well, I'm going to tell you one of the basic laws of economics that they stuffed down your throat in Econ 101 is there are 6 rules to a free market economy. But one of the keys was the Latin phrase, and all you guys from De La Salle and everywhere else, ergo hoc post proctor hoc, which is Latin for the rule of self-fulfilling prophecy. It was drummed into my head so much I can never forget it. But it is so much of economics, and it's one of the better rules that applies, is that there is in the realm of economics fulfilling prophecy, and you can make things happen. And again, because so much of economics is psychological, yes, it does weigh on it, especially when people, when it comes to credit markets and the impact on credit markets, very much so. So you have to pay attention to it. And, and then, of course, Keynes put it out there, almost in the same sense, which was really going back to, what's his name? Doesn't matter, Ricardo, which is basically the realm of, the paradox of thrift, is that when people start to get nervous, and this is why Keynes was a big proponent of demand support by government and deficit spending, is to pick up when demand becomes slack, because as people become nervous about economic outcomes, that's when you start to talk yourself into it. You do what most people do. I'm going to save more. I don't know what's coming. Yes, I have a job, and yes, things appear very good, but I'm a little bit nervous here. So all of a sudden I start spending less and saving more, which capitalism hates, because, we're meant, and that's why we have such large amounts of debt. When I was growing up, I'm older than most of you, people didn't have credit cards. We had one credit card in my family, the neighborhood department store, where, we would buy our school clothes, but that was it. There were no credit. In my family, it was a sin to owe money. It took me a while. Even when I started working, the only reason I ever got a credit card was because you needed one to rent the car and to stay at a hotel.
You know,
Otherwise, I never would have.
I'm 50. I
Yeah.
just recently got my first credit card. My ex-wife had credit cards, many of them, and my wife has credit cards, a few of them, and they're all paid off monthly. I just recently got my first. My credit is probably no good because I paid for things in cash my whole life.
Yeah, no. I still do. I still do. When they talk to me about electronic money, I get nervous.
Me too.
I don't have an ATM card.
Oh, that
I've never used an ATM machine because, as I told my kids, I am an ATM machine.
Me too.
That was always going to be my Halloween costume. I was going to go as an ATM machine.
Oh, that's a great idea. I might clone that, if you don't mind.
Go ahead. I don't have a patent on it. But I said I am an ATM machine.
Oh.
You know,
Iris, since you brought up the savings rate, last time I checked, which was like a week or so ago, the savings rate has begun to tick up.
Right. I know that. It's one of my things that I look at, and you know, and it's because they're scaring people because, as we know, unemployment is low, but the employment situation is changing, meaning it's not as easy to get jobs as they wanted. Oh, there's 8 million. Yeah, you know what? When I was looking for a job as a kid, I'd look at the want ads, the classifieds for jobs, and then I'd call up looking for a job when I was in high school and college. I go, wait a minute, there's all these people, because my father would say the newspaper is full of jobs. I'd call up, nobody was hiring me. I go, what's wrong? I don't have a criminal record. So jobs weren't quite as easy as I was always led. So when they tell me, the jolts, yeah, until you start looking, who they hiring, blah, 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 whatever. But there are things to be, I'm just cognizant of. And I'm glad that you had some Germans call in and say that, because as I told Santelli here, I said, you know what? I know that the dollar index is up here, but when I look at when I couple them with momentum studies, the currencies, the dollar doesn't look quite as good on a momentum study as it does just on a price study. So, I'm not much of a technician, but certain things I can read pretty well. So I'm not so enamored with it at this point. So, and I think that the dollar does have some issues here. And again, it may be, as people like to say, the cleanest shirt in the laundry basket. But yeah, maybe it's not quite that simple to me. There are problems with the dollar, and as this room knows full well, the amount of debt without the economy really having the strength that it should, the fact that we've been growing the debt with a better economy than most other nations is problematic, and again, I think where I applauded the cut in corporate tax, the corporate tax rate, had I been at the helm, I certainly would have done it so it was really totally revenue neutral, and really would have, as long as I was making an attack upon the tariffs and everything else, and trying to enhance the impact of all of that to better the U.S., I would have made it more revenue neutral. I didn't think they did a very good job with it. I did applaud. I think they wasted a lot of money, but that's always the case because you can't get tax. You can't get any type of tax program through without benefiting certain powerful lobbies. So that's what we
go on that in all articles and editorials on Bloomberg and every place else over the last few days about supply chains and those disruptions that are taking were part of the conversation we were having last week, and why we got even more bearish than normal is because, like guys like Bruce that are in here, hasn't been in the room because his business has been busy. He's busier now than he's been in the last 10 years. Jason was in town, and he said that a lot of his, he's having trouble with his clients because they're just deciding whether they have to declare bankruptcy because they can't put a price on their parts and they can't pass it on to their clients, and their clients aren't happy. So the supply chain disruption is having a knock-on effect to everything else that's going on right now.
Yeah, and I'll go back to this whole, I never thought, I understood what they wanted to do, and you know what? Somebody did have to put the screws to China so that they would play by all the same rules, and not just for what was hoped for in 2001, which if you go back and read the work of Bob Lighthizer, that's what he's been all about. And he certainly is knowledgeable about international trade agreements. And he was opposed to allowing China in willy-nilly to the WTO. He thought without really putting teeth into it, it wasn't a good route to go. So I know that had to be done. I'll go back to it. I think it was ill-timed because I believe they hurt the American farmer dramatically, and that was the destroying of the goodwill of the build-up of the Chinese marketplaces, because I just thought it was mal-timed. It's where I took them to task, and I understood where they were going. I wish it would have been thought out better. That's my, and I think that they've realized that too. But
I don't know if it was in the FT or Bloomberg, where again, back to your commentary, where Putin's always the big winner in this. That the chicken farms, hog farms, and wheat are all going to China out of Russia. So all those supply chains have moved from the U.S.
Yeah, right. Which is, there were other suppliers out in the world. That's why when I took Navarro and Wilbur Ross, who's kind of gone quiet here, he must be sleeping somewhere. They just, he said, oh, it's only going to raise, that missed the point. It missed the point. It's that the Brazilian harvest was coming in. The world was filled with all the beans you wanted. Why would you go and embark upon this at this time? That's, wait until, it was like when the air traffic controllers went on strike in the 80s, and Reagan shut them down, but they went on strike at a time when it was the summertime. Well, why would you go on strike? Why don't you go on strike if you're an air traffic controller at Thanksgiving or Christmas and make people really miserable? You have no, well, that's just stupid. Very ill-timed. Very ill-timed. And it was the same with this. Very ill-timed. Very ill-advised.
I got a question about Lagarde.
Yeah.
What do you think? What do you think Lagarde's going to do? What do you think the timetable is? Does this have to do with fiscal policy in Europe?
She's on a fast track here. What she's going to do and how she's going to do it, I don't know. But I give her, as I've said, she's got the political heft to do certain things that Draghi could never do. And you see how they're beating the hell out of Draghi, the German media, and he ain't going out on it, on a high. Everybody can see now. I won't say everybody, if you've been one of the beneficiaries of the Draghi policies, it's been a nice, and you'll applaud everything that he did. But he's being ripped on in certain segments, and I think rightfully so. Just as following the Bernanke playbook down the rabbit hole has really created a lot of problems, and it's there for everybody to see. And don't deliver me counterfactual arguments, because I'm like, oh, what would you have done? You know what?
I don't think anybody's going to.
Yeah, they tried for a while. Again, I was a fan of QE1.
This was our conversation yesterday, Ira, the fact that now you're seeing people believe that they're not going to get bailed out by the ECB, so there's no interest in any of the European debt instruments.
Yeah.
ECB has plenty of interest in them.
Yeah. Well, but then that's my second part of the question. And do the Germans stand up and say, look it, and this is Lagarde's problem. Do the Germans say, look it, Yeah, we understand where we're going. And last week's piece by Yanis Varoufakis was interesting in that regard. We understand. You're going to create a Eurobond. But isn't the fact that Germany is on the hook, and they're on the hook, let's call it what it is. They're on the hook for the entire European project. They're on the hook. Because what stands behind the ECB, and don't give me Powell's answer, a printing press, because that's not quite going to do it on an international basis. So if it is Germany, if interest rates in Europe are only as low as they are because the German nation, citizenry, stands behind it by guaranteeing it, well, is that a form of fiscal stimulus? Because that's the question. That's the question. And if any of these people had integrity, that's the question that they would be asking. And they would ask Lagarde, is that a form of fiscal stimulus? Because as far as I know, the guarantee of debt, and I'll go back to Alexander Hamilton. That's a form of fiscal stimulus. If I'm guaranteeing your bonds, if I'm a taxpayer, guaranteeing your bonds and your debt, and it's your ability to tax me that guarantees it, because that's the mechanism, is that not fiscal stimulus? And I'm not, I just pose, those are the two questions I've been posing to myself every day, going, how is this played out? How is this done? How does this work? Because if you accept that, that's a serious issue.
Yeah, but Ira, you know what? That's sort of like me going with my daughter to the bank and telling the bank, yeah, sure, give her the loan. You know what? I'll backstop it. And then the bank says, oh, okay, here's this piece of paper you need to sign as co-signer.
Yeah.
Germany hasn't done that yet.
Oh, really?
What did they sign that said they're on the hook, or that they would actually backstop it?
What did they sign? French interest rates at negative 40%. Dutch interest rates at negative 40%.
My neighbor keeps asking me when I'm getting a French drain. I said when I can get a Frenchman to do the work.
Well, that's because he doesn't want your damn water flooding it. I know that game. Yeah, I know that game. I had to go pull my neighbor out of his house. But no. This is when he was building his house. No. This is not going to sustain itself. This will drain somewhere else, but not here.
Yeah. So I'm worried about Germany. I really am.
There was an article I read today about this morning in the FT, quoting Wiedemann about this.
Yeah.
And I got to.
I read it.
Okay. So
I read it. Yeah. He's opposed to certain things, but he says the discussion is good to have. That's his. Oh, he was talking about what's his name, who. Well, first of all, he was kind of pissed that Lautenschlager resigned, which was interesting. So we can get into that argument deeper. But what's his name is also leaving the ECB, and he was talking about what a great role. I know. I read the article. So interesting. You can pull it up. I don't have.
Ira, I'm curious about something.
Yes.
Do you think the French economy has the wherewithal to actually stand on its own 2 feet in a way that Italy could?
No, I don't believe it, and here's why. The French government, the French state, I should say, is 56% of its GDP. Now, it might be a little bit lower now because they've actually had some growth, but there's no way, certain reasons, okay? And this is where Macron has to be careful. And that's why the whole thing with Italy, because the French are in no better fiscal position than the Italians are. Now, yeah, their debt to GDP ratio isn't quite as high, but it certainly violates the Growth and Stability Pact that is the basis of Maastricht. So the French, always have the finger pointed at them, and it's okay as long as Germany isn't pointing their finger at the French. But at any moment, when they get upset, they can turn and go, you're in violation of all this too. Which is my point about why you may say the Germans haven't signed anything officially, but I'll put in the negative. They haven't not signed anything either. Or as Otmar Issing wrote that piece a few years ago, rightfully so, talking about this whole thing with the ECB is really taxation without representation, which we as Americans understand the significance of that statement, for our fiscal existence. This is now, so it's implied. The Germans guaranteeing it is implied. And it's not only implied to Europe, it's implied to the world. Because I will tell you this, if you want to see real economic instability, have Germany announce that they don't stand behind the European debt. That's why Draghi trapped them. They're trapped. And Wiedemann knows it. I don't know where they go. So they're only trying to do, and that's why the clarion call is coming. You hear Draghi, but Draghi's been yelling about it for 2 years, 3 years. They need more fiscal stimulus. The bank can't do everything by itself. La da 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 da, la da 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 da. And he's right, but good central banks, what do? They buy time for the political entity, which they're part of. They buy time for the political entity to get the economic stimulus in place. And that's what the ECB, but of course, just like Congress diddled, let's go back to Chuck Schumer's famous comment, to Bernanke, you're the only game in town, which was a terrible statement. And at that point, Bernanke should have pulled back, but he didn't have the guts for it. And of course, we always come to May of 2013 and Bernanke cowering in front of the markets because the markets needed a dose of, they liked the liquidity. And that's when he should have said, no more. What? We've done what we can.
So you said that the central bank buys times for fiscal stimulus. So is Lagarde's job to lay the political cover for a infrastructure fiscal spending program in Europe?
Right.
Basically, ECB is backing it, i.e. Germany's backing it, and she has the political clout to make that happen?
Yep, with a euro bond, which is why I found the Varnafukis article last week so interesting, because the fact that he's really pushing it too. So they need a euro bond, which would then seal the deal for who's guaranteeing this, right? Because I doubt, and this was always my point.
Yeah, who wants Portuguese bomb? Yeah. Right. You want Italian debt at 85 basis points for 10 years? If Italy's as bad as everybody says, that's why it's implied. Because would you be lending money to the Italian state for 85 basis points? Let alone Austria for 100 years at 55 basis points. I thought Jim Grant's piece in Barron's over the weekend was quite good.
Yeah, that was good. It was pretty funny.
Yeah.
Yeah.
Well, yeah, funny. I'm not sure it's funny because when you think about it and go, who's on the hook? It's an implied guarantee. If it's not an implied guarantee, don't tell me because they have a printing press that I'm willing to lend Belgium, 10-year debt at negative numbers. I'm sorry. It's only because I believe that the German policy stands behind it. Well, why else? I don't care that you have a printing press. You know what? Zimbabwe has a printing press too. Argentina has a printing press too. So everybody's got a printing press.
So a euro bond. I mean, really, implicitly, the ECB's been backed. The German backstop is what's giving it credibility. So a bond goes a whole nother level. You're saying. Oh yeah, a European bond, then it's no longer implied; it's real, and you'll see that's when those spreads will condense because it's all euros. So and I think you see it going on now when the Asian buyers who may be stepping away from U.S. Treasuries, they put together a basket of the debt. That's what's going on. That's why you see certain movements on certain days. And it makes it really difficult to trade the European debt markets because you can get blindsided. We don't have access to that. And then you throw in the impact from the ECB, and you can really get blindsided. That's why we'll see some days Italian debt will be really under pressure, and then all of a sudden, like a rubber band snapping, they just snap right back because who's coming in? But they build baskets. Which makes perfect sense because if I believe that the implied guarantee is there, well, I'm trying to generate some type of yield across the board. But it's insanity. It's true insanity until I really know. I'm not buying European debt until I know that it's really German debt. Basically, now it's implied.
I think Italy needs to mark down its debt. It will mark down its debt. I mean, it's guaranteed it'll mark down its debt someday, and redenominate it or something, and they'll probably be a winner if they do it.
Yeah, and the Bund is up against all.
But that's someday. That's someday. Yeah.
The whole.
Yeah.
All of Europe.
Ira, assuming that's the way it plays out, what is the mechanism that gets put into place to prevent Italy, Spain, France, and the rest of the Club Med South from continuing their spending ways so that, there's a cap on what Germany is backstopping?
That is a wonderful question. And there is no one answer. But I believe that the push to get at Germany, because the push is at Germany, because it's just like in the United States. You find the place. Like, look if I wanted to shrink the deficit in the United States, like Obama started down that road when he put together the Bowles-Simpson Committee for Tax Reform, and Alan Simpson has been a great proponent of this, which is cut defense spending. And that's not a political statement. That's if you really want to get at the budget. David Stockman taught people that in the 80s, but of course they couldn't wait to get rid of David Stockman because that's the linchpin. That's the linchpin. If I want to really cut U.S. government spending, federal spending, all I do is have to take 10% out of the defense budget. And I mean real 10%. And everything else falls in line. But as long as it's going back to Johnson with his guns and butter. I'll spend on welfare, but I'm spending on defense. Okay, I don't like defense spending, but if it gets me my welfare, my social program spending, yeah, I'm all in favor of it. And that's it. As long as we're spending, we're spending. That's
but now Trump wants Europe to pay up, more of their fair share, if you will.
Yes,
for NATO and whatnot.
Well, and interesting enough that 10 days ago or 8 days ago, when they had that interview with Joe Kernan on CNBC, Navarro was hammering on the Germans for being too fiscally tight. Navarro came out and said, "We need the Germans to spend more." So he was laying. So they're all going after the Germans because once Germany breaks and they have that Schwarzschild. Is Michael? You got any Germans? Who's from Germany? On anybody?
Yeah, Lars. We've got a couple of Germans in here. Lars, are you here?
Yeah, Lars is in here.
Yeah, I'm here.
Okay, so what I'm going to say here, he certainly understands with the Schwarzschild, which is the black zero, is how it translates, and there are rules about how much the Germans, because this is German law. The Bundestag passed this law, so this is what is holding them back, and they're pushing for them to get away from this. Everybody is, because once you break Germany, once Germany starts spending money, everybody else, the log jam is broken, Italy will spend what they want. France will spend what they want. They'll all start spending. And this is where Lagarde is going. But right now, it's the Germans who are acting as, and it's not a political statement, it's just what it is. But if you
they're acting like the adult in the room.
Well, they question because again, they know who's on the hook here. They know who's on the hook. Yeah, it's Germany. Because I'm going to tell you what, if the Germans tomorrow put out a headline in the Frankfurt Allgemeine or in their Spiegel, if they put out a headline, we're not paying for the rest of you. Everybody will hit you up, but we're not paying for everybody else's debt. What do you think the European debt markets would look like?
They'd collapse.
They would absolutely collapse.
My answer to that is, oh well.
Angelo, right now, Ira, the DAC Italians, okay, are putting in
the what?
Italian is putting in an outside reversal higher week. Think about that.
Wait. I missed that. I'm sorry.
Italian, long Bund, short the Italian 10s.
Yeah.
They put in an ORH day yesterday. They're following through. They've broken out above the short-term averages. And on a weekly, they're putting in an ORH week. So the Bunds are...
Where is the Bunds trading in the futures terms right now? How many? They were down about 40 ticks. Where are they at?
173.92, and the Italians are 144.90.
Yeah, but the Italians are closed now, so you're not getting any data. They close. They close at 12 noon, so you're not getting any updates data.
So the last notes, it's showing a possible ORH week, and the pattern is showing ORH.
Okay. Well, it's worth watching, and more interestingly is again, we've gotten some steepening because people are, even in the U.S. they were selling the longer end, relative to the shorter end. The twos have outperformed everything this week, which it doesn't surprise me. We'll watch the 210 on the 200-day, which will come into play, I'm sure, soon. There are things worth watching here, but again, and I haven't heard from the German, those were, but it does, that was always, and I wrote several pieces over the last 5 years when Gunlach and Bill Gross would come out and say the best short in the world is the Bund. And I go, no, it's not, because at one time the differential between the French and the German was 20 basis points. I said, I'd rather sell the French at 20 points, and I can't be more adamant about it, because the French, for 20 basis points? No, because what if our worst nightmare got realized? All I'm risking is probably 15 basis points, because if there was an announcement there was a Euro bond, a complete Euro bond tomorrow, German yields would still probably be 5 basis points more than, French yields would be 5 basis points more than German yields. Even in it'd be unified, but it's like the difference between Illinois bonds and Texas bonds. There's going to be a difference, because one is a much more reliable borrower. So there'll always be some differential, but it would crush, the differential on that Italian-German would be crushed immediately if it was understood that the Germans have acquiesced and will absolutely guarantee every nation state's debt to its fullest. And we're not at that. People fool themselves because, again, why? Everybody's chasing yield. I'm not a yield chaser. I'm not a yield. It's good for a trade. It's like buying, and I'll go back to it. It's like when we talk about buying gold for a geopolitical event, for the Saudi oil refineries getting hit. How long did that last? That was classic. It was negligible. Yeah. It was, you better have been out so quick because you had no chance. It's the same concept. You know what? I'm not chasing debt. I'll chase it on a trade, but I don't chase. The history of the last 40 years, and probably the last 4 centuries, is when you chase negligible returns, when you chase, yields. Let's go back to 2008. People who chased an extra 40 basis points got crushed. What was, Judd, what was that firm up in the suburbs, Phil Bloom and others? They ran it, and people got destroyed. What was it called?
Peregrine?
No, it wasn't Peregrine, but Peregrine was one. But that, I'm sorry?
It was a bond group, wasn't it? They lost
everything. Yeah. Well, they were investing people at the exchanges overnight money, and they were busy chasing 40 basis points, and they blew up over 40 extra basis points. You know what? It's the same thing that happened in Orange County in 1994, 1995, and that one I know a lot about because I sat on that CFTC oversight committee, and I really got to dig into the weeds. That was unbelievable. For an extra 40, 50, and 50 basis points, you put yourself at risk. That's insane. And you know what? Honestly, to me, people buying 10-year, I still say if you buy 5-year, 10-year, 30-year debt in the U.S. and you take on that duration risk, you're out of your friggin' mind. Unless you have, you have a schedule of payments that you have to make. You're a pension fund, insurance company. I understand it, and you got to do what you have to do. But I think you're absolutely out of your friggin' mind. That's my view, and I can't tell you when. But as the rooster crows when the sun, it's at daybreak, it will come.
Lanesboro went to work for that firm. He left Bob and Astor, and he went to work for those guys raising money. And he lost everything. Yeah, no,
believe me, I was with a firm who got hurt in it. It really, you know what? And it's insanity. It's insanity how much risk people take on chasing negligible. Now, again, it's a trade, and I know, hey, Ira, you know what? You've been wrong. But you know what? I've been owning 2 years, and you know what? It hasn't been that bad. Yes, I don't have the capital appreciation that owning 30 years and 10 years has gotten me. But you know what? I haven't taken on the duration risk in my mind, and that's important to me. But I have been at times, involved in flatteners, thinking that the curve was going to flatten, so that's one way to play it. But now I'm looking to go the other way. It hasn't told me enough yet to think about it because, again, we can flatten out come Friday morning. If you get a terrible or a much weaker unemployment number, they'll rally the long end most. That much I'll guarantee because that's just a knee-jerk reaction. But good on you. Not for me. I'm not taking on that type of risk. So if you're an investor and you're taking on that type of risk, God bless you. But not with my money. It's just not the way I'm playing.
So I got one unrelated question. So
okay, and then I'm going to go. I'm going to answer this question.
We're looking at our CQG bills and how ugly they are, and everything that's gone on yesterday with all these guys going to zero commissions, and you now being a newly minted board member again.
I can't speak to any of that. So go ahead.
All right. So well, you can either speak to it or you don't. I understand, but are these other companies starting to put pressure on the CME about their data model?
I will never ever speak to anything CME related. Just can't. It's not appropriate. I wouldn't have spoke to it before anyway. It's just one of those areas I'm not comfortable going because if I know, I shouldn't say. And if I say, I don't know. So that's it. And I will, that's always the case with me. I like to poke fun at people who talk about things that they know nothing about. And you know what? I don't. And nor should it would really, I have a fiduciary responsibility. And Judd, you've known me long enough. The one thing I hold most important in my life is when I act in a fiduciary capacity, I take that seriously. I wish a lot of other people would. They don't, but a fiduciary carries a lot of responsibility, and I take that responsibility very.
Well, we appreciate that fact. I mean, it was just something I was musing
Yeah,
about this morning.
No, that's okay. But I do any fiduciary role, whether I'm a trustee for your family's funds. It's a very serious thing for me.
Okay.
So I have a fiduciary responsibility that I will never violate, ever.
Well, there you go.
So, all right, so I'll give you one more question.
All right. Anybody else?
Anybody else?
Matt?
Any of the Europeans?
Lars, this is your chance.
Hi. A simple one. Why is your opinion of German's fiscal ability so high? Because for me as a German, I see many problems for Germany the next 3 to 5 years coming, and I still wonder why Germany is so held in so high regard.
Why it's still held in such a high regard, Lars?
Yes.
You know, when we get into this realm of global macro, the one thing that you must remain cognizant of, and that I've learned a lesson of, and I hope that I really get this to you, is all things are relative. And on a relative basis, Germany is much better off than many others. Maybe even in the United States. Yes, they've done a lot of things wrong, and Lars, I've never been a fan of Merkel. Never. I find her weak, and as my friend Bernard would call her, she's the plasticine chancellor. She's been very malleable. She's picked up some of the worst parts of Helmut Kohl, and I think she has done things that have harmed Germany in the long run. More importantly, the curtailing of nuclear power after Fukushima. So we're already 8 years into that, or 7 years. I think it was a grave mistake, and I think Germany has spent a lot of money on energy because of it. And they've been burning the brown coal because she supported, at the same time, she was in partnership with the Greens on some issue, but yet they're burning brown coal. So I have some issues with the Germans in that regard, but because of the Schwarzschild and their ability to be savers, I think Germany, if they decide to dispense with it and really embark on an infrastructure program, they will help themselves dramatically. So on a relative basis, again, I think Germany is strong in that regard. And you know what? I have more trust for the Germans as being stewards of sound money. I wish that I could buy a Deutschmark, but the Germans don't wish that, because although maybe they do, because the weak euro has resulted in some things in Germany, in certain German companies pursuing policies that if they had actually a strong Deutschmark, they would have had to become better. They would have closed things down, and they would have been better capitalists with a strong D-mark. The weak euro has allowed them to sustain certain bad policies, but that's what they're going to have to correct. But going forward, again, Germany relative, and especially German corporations who have moved so much business to East, which makes German corporations, and makes me more a fan of the DAX and, of course, of the French. I'm not enamored with the French. I don't think they've done anything. And every time Macron tries to do some structural changes, of course, he meets pushback. We'll see if they get more of it. So, again, it's a very good question. And I agree with you. I think Germany has some issues that they have to tackle, but I think they're in a better position to tackle them than really anybody but the Dutch or maybe the Austrians on a financial basis in Europe. So, but I don't think the road is easy, But I just, if you ask me who will do better, I think it will. The Germans will, because they actually have the money to spend if they so choose it. The others don't have it to spend. The German financial house is in much better shape than it has been. But that's not to say they don't have problems. So with that, I would agree with you. But I think it's a question and a discussion worth having, which is the whole purpose of this. But I want it to be held on a European basis. And when Lagarde starts her push for fiscal stimulus, this discussion is going to be had. And you could see that Jens Wiedmann and Lautenschlager and others are going to force this discussion, which needs to be had. So that's where I really want to see the way the German stock market and German financial companies, and I want to see the way they perform, because that's, forget about all the discussion. That'll tell me what the market really thinks about Germany's coping with this. So it's a very good question, and it is something that this room especially ought to pay attention to as we proceed here.
Awesome. Thank you very much.
You're welcome. Thanks for the question. All right. I'm going to end it because it's a good introduction. I haven't talked with you guys for probably 5 days, 6 days, whatever. So we'll get more, but Judd, collect the questions, and then we'll just tackle them. And I think that's become a much better format, is line up the questions and then ring me up and we can deal with things.
Okay. Thanks, Ira. Appreciate it.
Yeah. Thanks, Ira.
Well,
Truly.
thank you. Okay. All right. Bye.